Imagine waking up tomorrow and discovering that the most boring piece of paper on Earth just vanished. No explosions, no sirens, just gone. That paper is US government debt. And if it disappeared, the global economy wouldn't celebrate. It would freeze. Right now, banks, pensions, governments, and corporations across the planet are quietly built on one strange idea. America owes money, and that debt is everyone's favorite thing to own. That sounds backward. Why would the world depend on someone else's IOU? This matters right now because US debt is at levels that make headlines look scary and politicians sound panicked. Trillions added, ceilings debated, defaults whispered. Yet behind the drama, something more uncomfortable is true. The world doesn't just tolerate US debt. It needs it. To see why, forget politics. Forget morality. This is a plumbing story. Start with a simple problem every financial system has. Where do you put money when you don't want risk? If you're a pension fund in Germany, you can't stash billions under a mattress. If you're a bank in Japan, cash is a problem, not a solution. Cash earns nothing, decays with inflation, and creates regulatory headaches. So the system needs something that behaves like cash, but better. Something liquid, something predictable, something boring. That something is US Treasury debt. A Treasury bond is basically the US government saying, lend me money, I'll pay you back on time with interest. That's it. No innovation, no magic. But here's the twist. This IOU isn't just an investment, it's collateral. Modern finance doesn't run on trust alone. It runs on collateral that everyone agrees is solid. US debt is the most widely accepted collateral on Earth. Banks use it to back loans. Funds use it to park trillions overnight. Central banks use it to stabilize currencies. Even competitors of the US hold it because there's no true alternative at the same scale. This didn't happen by accident. After World War II, the US emerged with something rare: a massive economy, a stable government, deep financial markets, and global military reach. The dollar became the center of trade. US debt became the foundation beneath it. Once everyone builds on the same foundation, changing it becomes almost impossible. Here's where the math gets uncomfortable. The world needs safe assets, trillions of dollars worth. But only a few countries can issue them at scale. And among those, only one can do it in unlimited size, in a currency everyone uses, with markets deep enough to absorb constant trading. That country is the United States. So when the US runs deficits and issues more debt, the world complains loudly, then quietly buys it anyway, because the alternative is worse. If the US suddenly tried to be responsible and stopped issuing debt, global finance wouldn't calm down. It would panic. Collateral would disappear, liquidity would dry up, interest rates would spike in places far away from Washington. Ironically, US debt is valuable because there's so much of it. Scarcity would break the system. This is why debt ceiling fights feel surreal to global investors. From the outside, it looks like the supplier of oxygen debating whether oxygen should continue. Now here's the part most people miss. US debt isn't backed by gold. It's backed by taxes, productivity, and something harder to measure: the assumption that the US system will keep functioning tomorrow. That assumption has survived wars, recessions, political chaos, and financial crises, not because America is perfect, but because it's predictable enough. And predictability is everything. There's a quiet irony here. The louder the US argues about its debt, the more essential that debt becomes. Volatility elsewhere drives money toward the very thing being criticized. Hype says, this is unsustainable. Reality says, there's nowhere else to go. China's bond market isn't open enough. Europe doesn't issue unified debt at the same scale. Gold doesn't pay interest and can't move at digital speed. Crypto is volatile and too small. So the system sticks with the familiar flaw. But this dependence has consequences. When the US raises interest rates, the cost of dollars rises everywhere. Countries that borrowed in dollars feel pressure immediately. Global growth slows, not because of local decisions, but because US debt sits at the center. It's power without a headline. And it's fragile in a specific way. Not because the US might run out of money, but because confidence can erode slowly, then suddenly. If investors ever stop believing that US political institutions will eventually do the boring, responsible thing, the premium attached to that debt changes. Not collapse, repricing. And repricing a foundation shakes everything built on it. That's why every debt ceiling standoff feels tense, even if the ending is predictable. Each one tests the assumption that this IOU is sacred. So far, the assumption holds. The world still buys. The system still hums. The plumbing still works. But here's the final uncomfortable thought. US debt isn't just America's problem to solve, it's the world's dependency to manage. And dependencies feel stable right up until the moment they don't. So the question isn't whether the world can survive without US debt. It's whether the world can survive finding out what replaces it.